there's such a big difference? And let me explain to you. So first of all, apparently there is a true terminology, cashback. Actually, this is what refers to new lending, because the bank would only give you a cashback when you borrow more money from the bank, and every bank have their own threshold. Most bank would apply 200k. So if you borrow less than 200k, you won't get that. If you borrow more than that, it's likely you can get that. But for some bank, they still don't give any for existing client. If you want to top up, I'm going to explain that. And second terminology is the cash retention. Cash retention is some limited amount of cash that your existing bank will give you if you are outside of the deed of acknowledgement. That's a DOA. What's that? DOA stand for deed of acknowledgement, or your loyalty. So normally that's 3 years. Some bank is 4 years. Okay, but for new lending, cashback, bank normally they will give you about 0.8 to 1% cash. And for your existing clients, and if you go to your own bank, chances are there you can get nothing, or you might get a couple of grand in very limited amount. But why is that? Okay, let me explain to you in a spreadsheet. Okay, so to answer why there's such big difference between cash incentive and cash retention, we need to get a fundamental of how bank calculates their profits or the interest of a mortgage. Let's use an example. Say the mortgage amount is $1 million and interest rate 4.89 over a standard 30 years term. What we will see is, you can see here, those blues are your interest or the balance. As you can see, these payments, it's from very high and go and it start to reduce little by little over the course of your mortgage life cycle, 30 years, let's say. So in the first 3 or 4 years, bank, that's the most profitable time from the bank, because you haven't paid your principal back, or just a very little amount, and they have a lot of profits from that portion. So that's why they would happy to give you a generous cashback. But if you stay with one bank, as it goes, right, and the incentive for the bank to give you new cash or to give you some of their profits back to you becomes less and less. So the motivation from the banks is less and less, because your existing clients, they know for you to change bank could take a lot more formalities, more efforts, and so the cost of them to keep you should be low. That's why it's really hard for you to get a good cash retention as an existing client, right? But if you're a new client, let's say if you're going to move to a new bank, for the bank it's 0 or 100.